important consequences that cripple us is actually worrying about financial consequences. So if we can just not to worry too much about it, I mean, of course, we all need money, we all need to have a good life, but if you can just put it in perspective and say, what's the worst that can happen? Even in that worst case, I'm not going to, really be penniless. It's okay. These things are, really not important. I'm doing it for this purpose or for this goal, and that goal is not necessarily money linked. Then I think you can be a 10x version of yourself and much more.
If you were to go and pitch to a venture capitalist that you are building a payments business in the fintech space, the chances are that he would laugh you out of the room. Payments is done and dusted. You have giants like Paytm and PhonePe and Google Pay, which are dominating this space. You might feel like, where is the opportunity left now to do something in payment space? And I had the exact same view. But I have changed my view about the payment space after my conversation with Srivatsan, the founder of Skydo. Skydo is building a payments platform for cross border payments. And even though this is also a space which has all sorts of large and small competitors, but the problem that they have identified is a unique problem. And I am now a customer of Skydo. That's the biggest change which has happened to me after listening to this episode. I think you'll be fascinated at how archaic the cross border payment platforms and systems are, especially for SMEs in India. And that is what makes Skydo such a promising startup. You're listening to the Founder Thesis podcast, and I'm your host, Akshay Datt. Okay. Can you start with understanding a bit of your background first? What is uh, if you look back and connect the dots, what made you become an entrepreneur and start Skydo? Just take me through your origin story, your pre-entrepreneurial journey.
Sure. So I actually, get all my inspiration from my dad. My dad is my hero, and ever since I was a kid, I've always wanted to grow up and be like him. Right? So, and my father is an entrepreneur, and he's an entrepreneur of the more traditional variety, where he had nothing else to do. So the only way to survive was actually to find something to build on his own. uh, Came from a very average family, no great financial backing or nothing. So, and he also could not, I mean, they did not have the resources to send all kids to college. So, one of my uncles went to college. My grandfather could not get my dad to study college. So, as a 17-year-old, my dad's only ability to survive was to somehow find a business to do. And I think it took him 7 8 years to finally land up with something. But by the time he was in his mid 20s, he actually had narrowed down on the steel business, more specifically the alloy steel business, so the kind of higher quality steel that gets used in automotive industry. Initially, for the first few years, he, along with his business partner, were just buying and selling steel as traders. Those were still the times of licensing and production controls in India. And eventually, as the market became more liberalized, the opportunity for just being a trader was kind of going away, because information arbitrage was no longer there, stock arbitrage was no longer there, and so on. So there was a moment where they had to choose between perishing versus moving to manufacturing. So they moved to manufacturing. So they started with very simple manufacturing of steel parts, very simple intermediate parts that would go into more complex automotive parts. And then over time they learned and have built a now a pretty solid automotive components business that manufactures a variety of auto components. So when I was a school kid, this transformation was just beginning to happen. So when I
Which
was
year
in,
is that?
yeah, I was in grade six in around 1990, right?
Okay.
So that's when this transformation from just being a trader to manufacturing started, and that was around the time India was liberalizing and so on. So all through my middle school and high school, I saw this business move from just a small office where my dad and his partner used to work the phones and trade steel, to the time when actually they started a factory, and so on. So that was quite inspiring to me, and that's all I wanted to do really. So I wanted to finish school, get a mechanical engineering degree, and go sit in my dad's factory and build it. That was my only aspiration in life. So pretty much I had closed my eyes to computer science. Computer science was the big thing at that point. In the mid 90s, everybody was studying computer science, and everybody was getting into IT companies. I completely shut my mind to it, and I said that's not where my life is. So I need to go sit with my dad in his business. So yeah, I studied mechanical engineering after school. Then I was a good student, so I also got a scholarship to go study industrial engineering immediately after my masters, after my bachelor's. So I went to the US, studied for a couple of years. Again, that was the time when everybody went to America and settled down. So I also did not think that that would be my destiny, because I had to come back here and run this business. So I came back immediately after my masters, and worked a little bit in my father's business. Um, Actually, I worked in a TVS company for a couple of years just as an apprentice, getting to know the business and so on, and then joined my father's business. My father himself told me, "Hey, you're too young. I am also quite young. The business is just getting started, so there is a lot of time for you in life. Why don't you do an MBA and come back?" So I went to ISB, did an MBA. So I would say till about 2007, my life was reasonably unplanned, or I would say unstructured, with the single goal of just doing a few things before coming in and settling down in the business. Also, in this period of between 1990 to 2007, the business had also grown quite nicely, from a very, very small business doing very simple parts to a reasonably complex, diversified business with good customers who were either OE manufacturers like tractor makers like Tafe, two-wheeler manufacturers like Royal Enfield, and a lot of tier one customers like the Lucas TVS Group and the other TVS Group companies. So we had kind of a good base which I could go in and help build. So I felt once I got into MBA, that was a turning point for me, because I was in ISB, and my peer group was all people from IITs, people with very big aspirations, and that's when I first came across this company called McKinsey. And everybody told me that, hey, if you want to do anything in anything, this is a great training ground, great finishing school, and so on. So, so my dad and I discussed that it wouldn't hurt for me to spend a couple of years at McKinsey, see how big businesses are run, and then come back into business. So that's how I got into McKinsey. So up till this point in my life, the only claim to fame was I was academically strong. I was more than saying academically strong. I was strong in taking exams. So if there was any entrance exam, I could clear it. Um, and so I got good grades in ISB as well. Got shortlisted for McKinsey. Was able to convince them on why a few years of management consulting would really help me go build a business. The other thing I also did consistently throughout this period was I was always telling everybody that this is all I want to do. I never told McKinsey that I want to make partner here. I always told them that I want to go build my family business, and I think that you are the greatest finishing school. So they hired me, and McKinsey was a second transformation point, because again, truly business and metrics and scale and other things that I could never have appreciated otherwise. I was able to appreciate. And in McKinsey, one other interesting thing happened. By this time, I was married and I had a baby. So my wife and I decided that the only way McKinsey was going to work for me was if I did banking projects and I stayed in Bombay, so that I would not be traveling every week like most consultants do. So I kind of forced myself to just get into banking, and that was again a great thing, because then all through my tenure at McKinsey, I mostly did financial services projects. That was eye opening for me, because
What kind
I
of projects? Like, what were the problem statements you were solving?
Yeah, various interesting problem statements. I naturally always gravitated towards the SMB world, because somehow, maybe because that was my background, it always kind of appealed to me more. So I did a lot of SMB loans, vehicle finance, non-banking finance companies, and expansion strategy for them. Then I also did a bunch of projects on org restructuring. Um, so mostly, I would say on the retail side of it, and less about insurance or corporate banking and so on. So did a lot of retail SMB finance type of projects with pretty much all the big names who were clients of McKinsey at that point. So that was great. That exposed me to a completely different world, and that also made me fall in love with financial services because I could clearly see that it's a very different world from the relatively low leverage world that manufacturing was and is. So that was
What does that
interesting.
mean? Low leverage.
Um, so what I mean is, in manufacturing, to make a dollar of revenue, you have to put in a dollar of capex, get machinery, build a plant. Then an operator has to work on it, and you are actually kind of constrained by the productivity of the lowest member in the chain, which is a manufacturing operator. Whereas finance by nature can have multiplicative effects, right? So it can uh, finance can multiply, money can multiply itself. So that's what I meant.
Okay, got it.
Yeah, so that was interesting. Then I went back to my family business. So I think I spent 5 years in McKinsey, 2 3 years longer than I had intended to spend. But it was a good time. I kept learning. I kept growing well in the firm, and until today, it has given me a great network of friends and other business leaders on whom I continue to lean on from time to time. Went back to the family business in 2012. Spent a little more than 5 years running it. So by this time, finally, my dad and his partner, had kind of grown tired of running the day to day, and they were willing to let go of operating control and let the next gen come in. I happen to be the oldest of the next gen, and so it was a good transition point from their generation stepping back to the next generation coming in. It also gave me the chance to apply a lot of the concepts I had learned in business school and consulting in reality, right? So, how do you make transformation happen? How do you use very simple things from how do you use metrics and dashboards to drive performance improvements? How do you motivate people towards a common cause? How do you make sense of vague, open-ended problems? And so on. And it was also a period of transformation in the manufacturing industry in India, specifically in South India and Tamil Nadu, because labor shortages had already started becoming huge. Salary levels were rising. BPO industry was taking away all the youth, so it was very difficult to find people. So in this period, I actually did a lot of modernization of plant and machinery. I started a new business unit, which was much higher on capex and much lower on human intensity. The reason I'm spending a little time on this is one of my core philosophies of a business, that it should be less people dependent, and that also kind of eventually drove me into what I'm currently doing. So yeah, I did this for a few years, and then it almost felt like my dream has come true, and I've arrived where I need to be in life, right? So it's like this is the culmination of everything that I've been wanting to do. So I'm where I need to be. Had a
How
few
big
years
was
of bliss.
the business? Like by the time you did the new projects and all of that, like
So when I
annual.
when I got in, we were about 150 crores of top line annually. By the time I got out, 5 6 years later, we had reached a little over 350 crores. So we had
Wow.
grown reasonably well in that period. I mean, it's not comparable to venture funded startups scaling trajectories, but for
Yeah,
a
it's not
company which
like
is self funded,
for manufacturing. It's good, right?
yeah, exactly. So yeah, it was good, but I towards the end of my 5 6 years there, I was kind of slowly getting tired of a few things. One was this low leverage part where I was constantly solving very low level problems of how do I bring in employees from Bihar and Odisha and everything, and make them motivated, stop them from fighting with each other, make the supervisors and others who spoke primarily in Tamil versus these laborers who spoke primarily in Hindi to collaborate and work together. So these were the problems I repeatedly had to solve in order to make more money, right? And secondly, the auto industry is also an industry where the top line is actually fixed by your customer. It's only the bottom line that you can improve by constantly doing operational improvements, quality improvements, and so on. So I was
But
thinking
you
that
can get
hey,
more customers, right? Like
You can, exactly. So let me come to that. So then I went and told my dad and his partner that, hey, I think we are going to keep growing at 8-10% year on year, and we'll do well. I will continue to be rich. Today I am driving a Honda City. Tomorrow I may be able to drive a Mercedes. But we can't do something non-linear if we continue on the same scale. So they said, what do you have in mind? I said, why don't we dilute about 15-20% stake, get a third party in, get some cash in. You guys have spent 20 plus years building this business, so you can also get a little bit of cash out. We'll get new equity into the company, but and that we can use to actually either make a product or expand or go multi geography. Like all of our customers were actually opening plants in Rudrapur, opening plants in other parts of the country. So I said, you can actually follow your customer, have multiple plants, really grow. They said, hey, clearly, you and I are having different viewpoints. I don't want to dilute even 1% of my stake. I'm very happy um, building a small sustainable business, getting good profits every day, and being happy. And they said you also should be right. So I said yes. I said I'm not unhappy. I just think we can do more. So this was the beginning of my itch to do something different. This was around 2015 or so, and then I realized that maybe I have this keenness to do something interesting. So why don't I do something on the side? So I actually incorporated a company, just a name and entity name, and thinking that let me do something like at that time analytics was the big buzzword. So India was exporting a lot of analytics,
Music,
evaluator, latent view,
fractal,
mu
so
sigma,
yeah.
fractal. All of these guys were like scaling and growing. So I said uh, I should just hire a few engineers, maybe do some analytics outsourcing, and then start. And the reason I zeroed in on analytics was because I felt like I should do some exports, because in this business I was actually buying everything in dollars and then making revenue in rupees in manufacturing, because machinery is imported, tools are imported, technology is imported, whereas revenue is in rupees. So I said I should somehow be on the better side of this bargain, where I spend in rupees and earn in dollars. That was one of the motivations for it. And a college friend of mine was actually an analytics leader in one of the IT firms, and he said, "If you start, I'm happy to consider helping you initially, and if it goes well, I'll also quit my job and we can do it together." Started, did some exploring, tried to get the first customer, etc., through some contacts, and then realized that this is yet another cost plus business, because by that time it had commoditized. So everybody said, all of that is okay, but we'll give you, so much per hour plus your margins. Then I said, I don't want to do yet another cost plus business. So I kind of abandoned that idea. I also realized that I can only do one thing at a time. It would be very difficult to go to my factory in the daytime and then do this analytics in the evenings. Not going to work at all. So I abandoned that. I continued to grow a little more frustrated, a little more impatient internally. And then somewhere in the 2016-17 period, I realized that if I had to do something, I had to leave, and I really had to like go on my own and build something. Um, so I had a fairly complicated conversation with my dad and his partner. They just couldn't, for their life, understand what I was trying to say. They thought of all the wrong things, right? They were thinking that maybe I'm frustrated with family life, frustrated with them, or whatever it is. I said, it's not that. It's a professional itch, and I just need to scratch it. And if I fail, I can come back here in 2-3 years, and nothing will change. But if I succeed, then it'll be great. And irrespective of these two outcomes, when I'm 60 years old, I don't want to regret that I didn't build something on my own. So that was the genesis of moving to Bangalore and getting into startups. And I also was a little pragmatic. By this time, I had two children, so I did not want to just completely like lose a cash flow income stream and start from zero. So I said, let me work in startups for a few years, build a network there, and then give myself a chance to succeed. So I said, in 5 years, if I don't do anything, I just don't want to be an employee. 5 years later, I'll come back to Chennai and run this business. But within 5 years, I'll give myself 5 years to start a business. So that was the move into startups. Spent a couple of years at Ola, a couple of years at Rupeek, and
One question: why didn't you get the family to fund your startup? Like, instead of figuring out that, okay, I need cash flow, etc., etc., your family was obviously wealthy enough to fund your lifestyle, whatever, and
Hmm.
and also put in some seed capital.
I think two things. One is I wanted to actually truly convince myself that I am doing it for the right reasons, and not just that I'm a little bored of monotony, so I'm just finding an escape route. Second is I also wanted to think like a startup entrepreneur or a tech entrepreneur would think, and that way of thinking was not at all in my blood at that time. I was thinking very differently. So that is why I had to come to Bangalore. I had to find a job and I had to get into this ecosystem. And later on, it proved tremendously useful for me. Like when I raised seed capital, when I'm now hiring, my team and so on, I can see that nobody thinks of me as this privileged guy who's just come in and who's using somebody else's money. Uh,
Right.
they see my body of work, and that gives them a conviction that this guy knows what he's talking about.
Mm, okay, interesting. So you chose Ola as your, like, the place where you landed. How was that experience?
So I chose Ola mainly because by the time I had done all of my family business, thing, a lot of my generation McKinsey folks had moved where the money is, which is into startups and into Bangalore. So a lot of my previous network was in Bangalore, and one of them actually got me this Ola job, right? So that's how I got into Ola, and it also felt to me a sensible choice because it was already a grown startup by then. So it was not like I was facing multiple risks in one shot. I just had to prove myself. It's not like the company also had to prove itself. So that is how the first experience was, and Ola was a tremendous learning ground for me because here was a company doing a million rides a day, and already a well-known brand, and any small action would actually really impact all of these different rides and different people. So I also got a great role. So they were building a new team to actually take the business from negative margin to profitability, and they created this new org called revenue management. Initially, I was not supposed to head it, but in a very few short months, everybody above me had actually left, and that was a very constant thing in Ola. Like lots of attrition of leadership. So they looked around and said that okay, this is the guy who's like got consulting and business experience, so he should be able to do this, and they gave it to me. Um, and for a little over a year, I actually ran that function of moving us from negative to positive through controlling supply, which is all the cabs that are attached to us and their earnings, through controlling pricing, which is the rate that you see on the cab, and through controlling customer demand. So this was like literally the tech team or the product team that was operating all the levers in sync to maximize platform revenue and platform profitability. So it gave me a great view, like a cockpit view of how a business works, both from a field point of view and from a central point of view. What I was able to bring to the role and to the table was the fact that I understood ground level operating businesses and operational people very well, which was a little bit of a rarity in Bangalore. And what that environment was able to teach me was how to run a tech business, and also to give me the confidence that hey, I'm not like some totally ancient piece of work that cannot understand and thrive in a technology business. I also can do it. It's like beyond, if you strip out all the details, it is also a lot about simple first principles, common sense, and a lot of basic things coming together. Um, that's also when I met Movin. Movin and I worked together in the same team, and right from the beginning, we became very good friends. Also, could see that we were very complementary. He was very deep, very thoughtful, very product oriented in his thinking, and I was always able to make great relationships with people, work at scale, work through conflicts, and work through different stakeholders. So we naturally complemented each other. We also shared a love for many things, like the similar kinds of music, We loved having a good time, even if we like had long hours of work. Still found some time to catch up after work and so on. So we became good friends then. So I think one of the, I mean, two tangible takeaways from Ola. One, I convinced myself that I did not make a mistake leaving my family business and coming here to Bangalore. I can survive here. I like this world, and I can thrive here. Secondly, the friendship of Movin. Then both of us went our own ways. I spent a little longer than him at Ola, but both of us went our own ways. I went to Rupeek. I was actually now thinking that I should now go to a much smaller startup, which is like also got business building risk attached. Because I was very clear that I had to start a company soon or go back to Chennai, right? And Momin went from Ola to Misho and PhonePe. So he had like two other product experiences, both of which were excellent. Misho was very transformative. He joined very, very early and saw the rapid scaling. After that, he went to PhonePe, where it was already a mature platform, but there his big thing was he ran the payments platform there. So more about that when we talk about the business. But for me, I went to Rupeek. Rupeek was at that time just beginning to scale. So they had done a couple of rounds of fundraise, and Sumit, the founder, was trying to build a leadership team and look for the 1 to 10 or the 10 to 100 journey, and leadership to come in and help him. So a common investor had introduced me to Sumit. We spent a few months talking. I really liked him. And at that point, I had interviewed with multiple companies, but I really felt with Sumit, I could. One, I felt like he was very respectful of outside talent coming in and seniors coming in. Secondly, he was very ambitious, but in a very understated and business focused way. Not like I would change the world type of ambitious, but saying that I can build a sustainable, profitable business. I can really scale this up and so on. So yeah, the reason for joining Sumit was mainly what I identified with in him as an entrepreneur. Had a great stint there, 2.5 years. Got massively impacted. The business got massively impacted by each wave of COVID because we were a physical plus digital business. We had to go get the gold from customers, and we had to go to their houses to give them the loan and so on. So each time a COVID wave come, the business got to zero. And with each subsequent wave, we also made the business more resilient. Scaled the business from about 4 or 5 cities to 40, 50 cities. From Series B, C. That was Series B was after Series B I had joined, and Series C was happening just when I had joined. To Series F when I left. Helped was the first leadership hire when I left. We had built the complete leadership team from product head to engineering head, CFO, head of marketing, and so on. So fantastic stint on all aspects,
Uh,
and
uh,
also
One question I
yeah.
have about Rupeek. Rupeek was an aggregator, like it would connect people who wanted to borrow against loan with lenders, or it was also lending on its own books.
It was a lender, yeah. So it was a lender, um, and banks used to be just a balance sheet provider for us. So we would co-lend along with banks. We also had an NBFC. So we were not an aggregator who would just do buying and matchmaking of banks and customers, but we would actually take risk and lend. And obviously, since a small company cannot hold the entire balance sheet, we used to co-lend along with banks.
Okay, got it. Like maybe 20% of your own funds
Correct.
and
Correct.
80% from banks. Okay,
That's
got it.
right.
Got it. Got it. Okay.
Yeah.
Okay. Hmm.
So yeah, so towards the end of the 2 years at Rupeek, I kind of felt like I think I'm done being an employee now. I think whatever I need to learn from the universe, I've done it, and now I should take a call. I should either go back to Chennai or I should start a business. So I had come to that kind of point in my career. This was mid 2021, and it was also the end of wave two of COVID. So Movin had got stuck in Chandigarh the entire wave two. So he went there to visit his family, and then he couldn't come back to Bangalore at all. So he had come back, and in between we had always been in touch. I went to his wedding in 2020, just before COVID. And then I knew all his career moves and so on. And so we knew what was happening in each other's lives. As soon as wave 2 ended and he came back to Bangalore, he said, "Hey, I'm just back. It feels great to be back in Bangalore. Let's actually catch up for a drink." So we caught up. We were chatting, just generally about everything. And then eventually the conversation turned to, what next for you and so on. I was telling him, "Hey, I'm at this point where I think I should either start or I should go back and run the family business. I think I've given myself enough time, and that time is kind of coming to a close." So he said he's a second time founder, so he had already started and run a company before joining Ola. That company is still running. In fact, just recently it got acquired by another larger company. But he left an operating role in that company as soon as he realized that was not going to scale non-linearly. So he said, I think I have another startup in me, and I want to start up, but things are going exceedingly well for me at PhonePe. So I'm enjoying myself, but I feel like in the next few years I want to start up again. So this was the conversation. Then we kind of got into, okay, if you start up, what will you do, and what kind of business, and this and that. And by the end of that evening, we had got into a place where we felt like, hey, not only do both of us want to start up in some time, uh, we also have very very similar points of view on what kind of business we want to build, and so on. Basically, we were aligned also on multiple things right from the beginning. Like right from the beginning, one of the things that also got us together was both of us were very people oriented. We also wanted to build great teams. We wanted to build a great culture. We always used to find the culture at Ola very abrasive and a little difficult. So we always said, like, if I ran this place, this is how it would be, and so on, right? So we had very similar overlapping philosophies on people, on culture, on the kind of business to build, and so on. So that night was very energizing, especially for me, because I was in that frame already. So, so the next day we actually, did a call, and I told Momin that, hey, last night we had such a good conversation. I don't want it to just go waste as yet another, casual conversation in a bar. So if you're serious about starting up in some time, and if you think financial services is the place to do it, why don't we just have some brainstorming chats every weekend? It need not go anywhere, but it'll just be like interesting for me. Um, and and then we just started that. And in one of the early conversations we also kind of said, I asked him, like, if do you want to start something together, like would you be open to doing a business with me? He said, absolutely, I love working with you, and I love spending time with you even outside of work, so definitely I'm happy to do it, right? So with each conversation, my primary thing was, if these conversations themselves didn't happen consistently, then anyway, that there's not much energy to it and it'll fizzle out. But to both of our surprise, actually, we met every weekend for the next 6 to 8 week or 7 8 weekends, from about July August of 2021 to almost October 21. So much so that by the time Diwali came around, we were not only at a place where we wanted to start together, but we were like, uh, there's no greater time than now. Let's actually like quit our jobs.
Did
Uh,
you have an idea by that time, by Diwali?
yeah, we had an idea by that time. So we, I'll walk you through the idea generation journey in a moment. But we had an idea at that time. So both of us felt like the natural next step for us was to validate the idea, and for that we had to go talk to external people. And we did not want our founders to actually hear from the environment that we are deciding to start up. So we said, even before we talk to a single human being, we should tell our founders that this is running in our mind. So I went and told Sumit that, hey, Sumit, I'm thinking of starting a business in this. So, and I want to quit at some point. So he said, absolutely, I'm very happy if you start a business. So I'm very supportive, but take all the time you want to crystallize the idea, etc., etc. I also need at least 3 months from you, because you are literally running the business. So it's very difficult for me to just like not have you around, very soon. So I said, I'm giving you not 3 months, but like I'm happy to spend 5 months from today, right? So let's take it slow. But I'm just telling you this right now so that if any investor or anybody in the market comes and tells you that I'm speaking to them, you should know it from me first. They said, great. So Momin also had a similarly positive conversation at PhonePe. Uh, and then, therefore, both of us got out by, he got out in January and I got out in February of 22. The good news is we were already able to raise capital by then. So we raised our seed round even before we had quit our jobs. Uh,
Amazing.
that's less about our ability and more about the combination of right idea, right place, and also fantastic positive environment for fundraising at that point.
Right.
uh,
Mm.
because we were just coming out of COVID. Everybody thought, businesses, digital businesses are the way to go, and
New
and
normal.
all areas were
Yeah.
getting funded, right?
Mm.
So we were beneficiaries of that buoyancy, uh, and and I also think we had a clear, good vision, and we had a great team, a complementary team, and so on. So we got funded. That gave us a lot of ability to do a lot of right things, which we'll talk about in a moment. But I think long answer to my background, but let me pause here.
Okay. Tell me about the evolution of the idea. That was what you were going to tell me.
Correct. So uh, when we started, we said, let's stick to financial services. You are in a fintech, I'm also in a fintech. So let's stick to this space. We both have a view that in India, financial services is massively supply starved. Right? All kinds of financial products are under penetrated. Customers want it, and the system is not able to provide it yet. It could be because of access, or it could be because of distribution challenges. It could be because of any reason, but there is much more demand than there is supply, and this is going to be the case for at least the next decade, or maybe 2 decades. So financial services is going to do well, and we are in financial services. So let's stick to financial services was the first decision we made. This was made right that day when we met. So within financial services, I had some strong points of view because of my Rupik experience, that we should actually pick areas in financial services where we could actually legitimately challenge incumbents. That is, we had an ability to challenge incumbents. And I felt, for example, that lending was not one of them. Many of our challenges in Rupik was because of the fact that the where to play, as McKinsey would call it, was very difficult. So McKinsey has this two-part framework called where to play and how to play, right? And they say that where to play determines a large part of your success, and the how to play or your execution ability is only a small contributor.
So,
So if you choose a wrong line, then even if you are the greatest executor, it's not that you will have fantastic outcomes.
hmm. Essentially, it's
So
like the TAM philosophy. Like for a lot of
absolutely,
VCs,
yeah, yeah, yeah.
their way of evaluating a startup is how big is the TAM, total addressable
Exactly,
market. So that is where to play. Okay.
exactly.
Hmm.
So for me, I felt like while Rupik was such a smart team and we all worked so very hard, the fundamental point was that as a uh, fintech whose cost of capital was much higher than banks, whose risk management was not as well evolved, and who was not regulatorily in the driver's seat, unlike a bank, it was always going to be a challenge. And bank ultimately is also a 360-degree product, right? They have multiple things. So once they acquire a customer, they could make money off the customer in multiple different ways. And we were hamstrung on all of these accounts. So for me, I felt like lending was not a day one game that a new fintech can play, because we neither have the product, nor the distribution, nor the cost of funds, nor the regulatory advantage. So 2 3 areas that we kind of identified where fintechs could legitimately challenge banks was payments, banking infrastructure, that is BaaS, and at that time globally also BaaS was a big thing in 2021
BaaS is
2020.
banking as a
Banking as a service,
okay.
yeah, banking as a
What
service,
this
which is basically
Zeta?
all kinds of financial infrastructure in India. Companies like Zeta, M2P, and so on. Globally, multiple companies were doing well at that time. So that was something. Then we felt like checkout optimization was an interesting area. While it was not strictly financial services, it was at the border of financial services and commerce.
There is just
Still,
pay.
it
Just pay would be
not
an
just
example.
pay.
Or,
Just pay is still infrastructure.
okay.
So companies like y- you
Quick, go
know
quick.
Go Quick were
Hmm.
were doing this. Yeah.
Okay.
So that was another interesting space for us, and we were also interested in emerging things like wealth management, which we said that in the next decade it will grow massively. So that's also something to think about. So this was the space in which we were thinking about. That is a few areas outside of lending where, as a fintech, we could legitimately play and have some reason to win. Um, then one by one, we actually kind of thought deeper into it, like whether we identify with that problem, whether we can see a problem, and whether we can see ourselves building a large business there. And slowly, we started gravitating towards payments. uh, Main reason for that was that we just felt that the time was virtually unlimited. One thing. Second thing is that we felt like we could spend many years learning, tweaking, improving until we actually found a large enough space. Whereas in many of the other areas, it felt like a 0-1. That if you didn't get your game right, you probably didn't have a play. Right? Somehow that's the feeling we got.
What's the example of 01 with another space? Like,
Let's
like
say let's take checkout optimization, for example. So we felt like checkout optimization, the moment a couple of players became so big that they are sitting in the interface, then you know they already have the shipping addresses of Akshay, so they can offer the next customer even more value, and so on. So the winner takes all kind of kicks in there.
yeah.
Right. So that was one example. Similarly, in wealth management, again, like you get some AUM, then you have wealth management is still, I would say, there is space for more than one player, but that would then mean there the risk was either you become a lifestyle business where you are managing a few hundred crores and then you're just becoming an independent financial advisor, versus you are actually the platform where everybody wants to go, right? So these were the things. Whereas in payments, what I thought was you could be solving one TAM at a time and gradually keep expanding. It just felt much more for me, a forgiving business where there is a lot of time to learn and grow and evolve.
Okay.
uh,
Okay.
I don't know whether I feel the same today, but definitely that time this is what I felt.
Mm.
Momin being in PhonePe also helped us a lot, because then he had that instinctive understanding of the tech behind payments, and so he said that yes, there is enough tech here that can create a competitive differentiation. There is enough product nuance here to actually make great experiences happen. And for us, the simple example was, hey, UPI is a common rail. Every bank has it. How is it that literally two or three payment companies are actually dominating the UPI space? You also have no reason to use a phone pay versus using HDFC or ICICI's native UPI app. But none of us ever use the native app, right? We always use one of these payment apps. So he said the ability to use product and tech to increase adoption, to improve customer retention, etc., is tremendous here. So we kind of slowly started gravitating towards payments. um, this is when I felt like, then suddenly the flashes from my past just came in and it all came together. I said, hey, I know that business to business payments are so archaic. My accountant still writes checks, and then people still come in and stand outside his office and wait for their check payments. And when I used to import machinery or export parts, it used to be a different level of complication. I don't even know for 3 4 days whether somebody has received my money or not. I don't know what my bank charges me is right or not. So all of these challenges exist. And if I'm dealing with a country like some Eastern European country or Latam, etc., it's even worse. If it's not dollar or euro, then it's even worse. So like these were still anecdotal things. We were just shooting the breeze, and then we said, "Hey, what if we actually just ignore consumer payments, because there's just too many companies already, and many of them have become at scale, and we only focus on business to business payments." Then we started talking to a few people. So we started talking to some factory owners here that I know, my dad's friends, my own family business accountant, and so on. And we kind of realized that B2B payments are still at least a decade behind consumer payments. Uh, the only problem was there was not much money made in domestic B2B. Whereas cross border, there were like huge margins, and we said, why don't we start with cross border payments? There are margins there, so there will be a reason for somebody to shift to us, and then we'll see over time. Maybe the market will allow us to do something in domestic also, but we can start here. So yeah, so this is all that the idea evaluation journey brought us to. The moment we decided cross border payments, And since we had also spoken to two, three customers just to get a little bit of a sense of the idea, these were all manufacturing guys, by the way. Uh, we said this is good enough for us to quit our jobs now and do deeper research. And at that point, fundraising was not even on our mind. What we thought was, we'll because we can't do. Momin is also exactly like me. He can't do two things at the same time. So we said, let's just quit. Spend maybe 3 to 6 months just talking to people, traveling the length and breadth of the country, and the moment we find a niche to actually start, we can actually, like, both of us know enough people in Bangalore now to raise about $200,000-300,000. Once we raise that, we can have one engineer in the team. The three of us can build something simple, and then after some time, we can raise a proper round. This was our idea uh, initially. So I think with this conviction, we quit.
And how did the fundraise happen then?
The fundraise happened because, like I said, the industry also was searching for somebody to come and solve this problem. Because by this time, see, VCs also have their own thesis building approach, right? They keep looking at spaces, comparing it with another country, comparing it with another space, and so on. So I think independently, VCs had also come to the conclusion that B2B payments had to be disrupted, which we didn't know, obviously. So when I told Sumit that I'm quitting, then the next logical step for us was to talk to more customers and start talking to a few VC friends, just to see if this idea even makes sense. Uh, because one of the early conversations I had with a friend, a VC friend, is when I realized that Go Quick is already a business. I didn't know about that company till then. I thought checkout optimization is a great idea. We should do it, and we can build the Bolt of India, etc., etc. And then realized that there is already a company which is doing, and in fact they had raised two rounds of capital by that time. So we said VC, one or two VC friends we should talk to. One of the advantages of having been in McKinsey is that VC industry is filled with McKinsey alumni who would have a non-evaluative chat, right? So I reached out to a few friends and said, hey, I'm thinking of something, uh, but this is like at the idea stage. So I don't even want you to think of it from a VC hat, but just think of it as a friend, and then just give me some feedback. So as I spoke to, so one of the early guys I spoke to was our current investor, Elevation Capital, right? So Mridul at Elevation uh, is someone I know from McKinsey days, had kept in touch with intermittently even after that. And he said, okay, let's talk. And I told him that, this is what I'm thinking about. And I could immediately see his eyes light up. So he said, oh, we have a very strong point of view that this is an important space to be disrupted. So I said, then let me not say more to you. Let me do some homework and come back. Right? He said, yeah, fair enough. I'm going on a vacation. That was by the time it was December. So he said, I'm going on a year-end break. So why don't you come back to me in the first week of January or something like that? So in the meantime, we spoke to two, three other VCs because we were very encouraged by this reaction from Mridul. So I spoke to a few other VCs. They all poked holes at the basic idea. They said, how will this happen? How will that happen? Why will a business come to you? How will a bank we even wanting to partner with you? As a a non-licensed entity, will RBI even allow you to touch money, and so on and so on? None of this was clear in our head yet. And I'm saying this to you because you're whoever listens to your podcast and is having a business idea, they should not think that I need to know everything before starting, right? Because all of this is a discovery process. We had no clue what the regulations were. We had no clue why a bank would partner with us. I would say at that point we were just collecting questions, nothing more. Um, so, but this collecting questions all through December was so useful that early January, when I actually went to meet Mridul, I had answers to many of these questions. I had by then discovered that there were some regulations which would allow, payment intermediaries to process payments. I had found out that there are globally comparable companies like PayPal, Payoneer, etc., which do cross-border payments on behalf of clients, and what is the regulatory structure on which they operate, why a bank should partner, how can I collect money, where will I start, what is the total addressable market. So a lot of these things we were able to answer sitting in December. December was year end, everybody was out on break, and for us that was a great time because we had also resigned from our job. We were serving notice period, so we had a lot of free time on our hands. So we could do a lot of homework. on thinking about TAM, thinking about regulations, thinking about use cases, and globally comparable companies, and so on. So early January, when we went with our first pitch deck, Brazil was already, like, reasonably amazed that, in 1 month these guys have, moved so much in their thinking. So I think that's one important thing, which is, in especially in the first round of fundraise, acceleration of your thinking process from meeting to meeting is very important. So yeah, so this, I think, was the journey, and journey up leading up to the first fundraise. Then we had a month of constant, back and forth. We were meeting like many funds. Some of them were, less enthusiastic. Some of them were more enthusiastic. But elevation was one constant, and they also constantly helped us improve. So they also did some research on their side, and so on. And finally, end of January, we got a term sheet from them.
And this was a fairly sizable seed round, right? Like $5 million, as opposed
Yeah,
to
yeah, it
what
was
you
a
thought, 200,000, 300,000.
correct. Yeah. So even knowing what to raise was actually a discovery journey, right? So we thought $300. Then when an institutional investor got involved, we thought maybe 2 million. But as we started, then, in one of the meetings, they asked us, okay, if you were to raise now, how much would you raise, and what would you do with that money? So then we excused ourselves, and we actually said, I'll come tomorrow and talk to you, because we had to think about it deeply. Spoke to a lot of founder friends. The other advantage, of all these networks, McKinsey, ISB, IMA, of my co-founder, and so on, is that a lot of our friends were also founders. So then we quickly spoke to some of them, understood, how do you think about fundraise, how do you think about deploying capital, and so on. And we got a fairly good idea of where to spend money, how to build a team. So we said, and we also, I think one good thing that we did was we were also very honest to these guys. We said, hey, if we raise $1 million, we would probably hire two engineers. If we raise $2 million, this is what we would do. But I think that if we had a say in how much we could raise, we would probably raise somewhere in the $3 to $5 million range, because that would probably give us like an ability to build without worrying about money for about 18 months. And we believe that in this space we will need time to build the underlying infrastructure. The It's not like, for example, a D2C brand or a commerce business, where from day one I can actually have an app, see some downloads, and so on. This will need many months of building before I can even make a single dollar. So that answer, I think, appealed to them, and they saw these numbers, etc. And deciding how much to raise was primarily just based on what percentage we were willing to dilute. So we said we'll not dilute more than 20% in the first round, and within that we'll try to negotiate for the best deal we can get. So ultimately, it kind of ended up the arithmetic ended up at this level.
Okay.
So yeah.
Fascinating. What were some of those answers to questions, like, say, the TAM? What is the TAM of cross-border payments? How, from a regulation point of view, what is the opportunity to build something here when you're not a bank?
So the TAM, is that, so the first thing that got us excited about international payments was the TAM, because globally, in that year 2021, $42 trillion passed between countries, right? Then if you just remove all the government to government flows, large corporate flows, etc., just the SMB flows were about $7 to $8 trillion. Right. And in India also, India had done in that year the exports of about 650 billion. Today that number is closer to 900 billion. But 650 billion was India's exports, and $1 trillion was India's imports. So imports plus exports put together was $1.6 trillion. Within that, the share of SMB was about 30%. So today India does about 250 to $300 billion of SME exports, and this is spread across, three very broad groupings. One, I would like to think of it as, the manufacturing space, or the goods exporters. The other extreme is the services exporters, and in between these two is marketplaces. So it it's not a messy list because marketplaces also has goods or services. But the reason I like to think of these three separately is because marketplaces is just growing unbelievably crazy. It's like doubling or more than doubling every year.
What's
Goods
an
are growing
example of
slightly slower.
marketplace? Like
Marketplace
say,
on the manufacturing side is, let's say, an Etsy or a Amazon or a Walmart, etc., where somebody is an aggregator who is buying from a lot of small people and then selling to others. Now there are also vertical specific marketplaces that are coming in for handicrafts, like somebody called Bizarre is there. Uh,
or like Lalten.
there
I don't know if you heard of them.
Lalten, absolutely yes,
Yeah.
Lalten.
Okay.
Then there is a company called Artisaga, which only works on artifacts and arts and
Mm.
handicrafts. Then there are many companies in the chemical specialty chemical space now coming up, furniture space. So these are vertical marketplaces. Then those are horizontal marketplaces which do everything. Um, on the services side, similarly, Upwork, TopTal, these are all services marketplaces. So these are growing massively, and so that's why I'd like to carve it out separately and talk about it.
Mm.
Services is basically anything from an individual freelancer exporting services to a remote worker working for a company globally as a contractor, to small dev shops, small digital marketing agencies, travel, tourism, financial services, advisory, content writing, many small services businesses. On the manufacturing side, it's everything from engineering companies like the one I was used to running, to gems and jewelry, furniture, furnishings, textiles, fabric, uh, Ayurveda, and so on and so on. So many fields there. So this is a, $300 billion TPV TAM. TPV is basically total payment value.
Mm.
It's like the GMV of the space. So that's
And
that's just
typically,
exports.
the margin that is that the payment processing companies earn is what, like 1% or less than a percent?
Yeah, less than a percent.
Okay.
So the industry average is for all big players would be somewhere in the half to 1% range. So
Okay.
as you find more and more ways to extract profits, you can get closer to 1%. Uh, if you are just giving a point solution, it may be closer to half percent.
Okay. Got it. Hmm.
Yeah. So this is the business in terms of TAM, and right from the beginning, we also were clear about one thing, which is that we would not be an India-only company at all. We would be global. So we set up the company in the US. We set up an India subsidiary. It was very complicated and painful for us to do that because of regulations and all that. But we still said we'll do this because we feel like very soon we will be global. So no point in at that time struggling to take this India entity global and so on. Because we also read and studied deeply other cross-border companies and how they evolved, and we could see that this business was going to be built corridor by corridor. So you would build strength in one or two corridors initially, keep growing volumes there, keep growing, your risk management, your compliance, your bank partnerships, everything, and then once that comes to a certain critical mass, then quickly adding more corridors both on the sending side and receiving side is not that hard.
Like you build India, US, or India, EU, and then you go into South America or like other places, basically.
Exactly.
Okay, okay, okay. Got it. Okay, and okay. So that's about the TAM question, and you also explained why global. From a regulatory perspective, what is the way to do this? Like, how does
Yeah,
it
so
operate? Because you cannot. Uh, like you're not a member of Swift, I assume, and Swift is how international payments happen, as far as I understand.
correct.
Maybe
Correct.
just do a like
Uh,
a 101 on how international payments happen first, and then where a company like you would fit into that framework.
yeah. So international payments basically happen through two ways, very simplistically. One is um, through the credit card network. So companies like Mastercard, Visa, etc., have built their own proprietary networks. Uh, so you could move money through them. These are also ultimately, held in banks, but they don't need a Swift messaging system because it's Mastercard on both sides or Visa on both sides. So they act as the messaging network themselves. The other one is the Swift system. The Swift system is just a uh, international messaging system and not a money movement system. Swift basically says, who is sending money to whom and what is the underlying amount. That's all the Swift says. But it's a common language that all banks can understand globally, irrespective of their country's financial system, regulatory standing, and so on. So the way actually money moves is that, let's say you want to move money from the US to India. The US bank can only send dollars, and the Indian bank can only receive rupees. So this is the mutually unintelligible part there, right? So then there are some global banks, a few global banks, who have the ability to internally, market make. So this is like the likes of Bank of America, Standard Chartered, HSBC, Citi, Barclays, and so on. Who are the like? There is probably a handful of banks globally who actually are able to hold different currencies, and these are the guys who are actually making the market. So whatever conversions, etc., that we see are made by these guys, the big guys who exchange money. So ultimately, anybody has to go via these people. So these banks in a transaction. These banks are also called correspondent banks. So when a sender in Europe, let's say in UK, let's say is sending money to somebody in India, he might be sending the money from, let's say, Sheffield Community Cooperative Bank in England. That bank would be plugged into the Bank of England system, but they may not be able to deal with anything other than UK pounds. So this bank then has to send pounds to Barclays and tell Barclays that, can you send these pounds to, this person in India who needs to receive it in rupees. So then Barclays would send that money to, let's say, HDFC Bank in India. Barclays and HDFC Bank would have, an account with each other, where Barclays could keep pounds in HDFC Bank and HDFC Bank could keep rupees in Barclays. And at the end of the day, every day these things are settled, and that settling is how the currency rates and other things are, finalized. So then the HDFC Bank would, receive that money in their account. They would have received dollars, and then it's not like there is nothing which can physically convert a dollar into rupee, right? They would basically say, okay, this is the dollar today, this is the prevailing rate, so I would actually use my another account, house account, and give rupees to this customer. Right, that this is exactly in a very very basic way how international money movement happens.
Okay. And
Now, added to this, there are a few layers of complication. So, in this conversation, like I said, because the small UK bank, now in India also, if the ultimate bank is not HDFC Bank, but let's say Saraswat Bank in Maharashtra, Saraswat Bank may or may not have the ability to, receive dollars. So they would be dependent on an HDFC Bank in between. So in a very simple case of UK to India, which is a very liquid corridor, UK pounds to rupees, you can still see that there could potentially be four banks involved. Now, if the complication is like, let's say, somebody is sending money from Peru to India, then that, Peruvian currency has to first get converted to a common currency like a US dollar to Indian rupee. So this is how it starts getting more complicated, and this is the complication which Swift is solving by at least having the information transfer in a standard way that everybody can understand.
so the Swift would tell every player in this chain where the money is eventually headed to. Like
Correct.
HDFC and Barclays, all of these people would get, like HDFC would get the money from Barclays along with the Swift information that this is eventually headed to. Okay, okay, got
Yes,
it.
that's right.
Mm, mhm, mm.
Now there are regulatory systems that then complicate this further. So a country like India, for example, does not have freely convertible, currency, right? The RBI actively or passively manages the currency. Uh, so therefore, RBI needs to have full control over every dollar that is coming into India and every dollar that is going out of India also. Uh, Unlike the other example is, let's say, a country like the US or a UK, where the regulator is not bothered about this. their currencies are freely trading and freely convertible. So when you send money to somebody from US to UK, it's almost like a local payment. Although it is still an international payment and therefore a little more complicated than a local payment, it is not as complicated as sending money to somebody in India or a Philippines or a Vietnam or a Malaysia or any other market where the regulator is more restrictive and has capital controls. And the free movement cross border of currency is not allowed.
W- what does that mean in practical terms when a currency is not freely convertible? Like, uh, the is RBI somewhere in this chain that you explained to me, from Sheffield Bank
Yeah.
to? uh,
Correct. So RBI is not directly in the chain, but RBI controls this through its licensed banks. So RBI has nominated banks to be the sole converters of foreign currency, and they call these guys authorized dealers or ADs. So an AD is required in this chain to convert money. In the absence of this, for example, if I had a payment license in a freely convertible country, I could actually receive the money in foreign currency and I could convert it into Indian rupees with my own treasury. But in India, I can't do that because RBI needs to know every dollar and why it has come into the country. So, irrespective of whether it's an individual remittance or a business remittance, every dollar that gets converted comes into an AD bank. The AD bank needs a purpose code against which it will classify that amount. And then every day, end of day, they have to report it to the RBI, saying that this is how much dollars I have, which was received from this currency across these purpose codes. And then this information is aggregated by RBI across all over the year. And if I go into a little more detail, RBI also needs to know what is the balance between goods shipped out of India and money receivable versus the money that came in. And these two numbers they constantly try to reconcile to the largest extent possible. I mean, even if at a national scale they are able to reconcile it to 95, 96%, it is still great. But this is what they try to do.
the logic being that black money, black money should
One is
not
black
be
money.
going out
Yeah, one is
into dollars. And
exactly. One is black money. Second is that, hey, as an emerging market, for me, the currency is very important for me to carefully keep the currency in a certain band. I don't want it to be too much import friendly that it becomes very, very expensive. I also don't want it to be too much export friendly that it becomes expensive for me to import goods. It has to be somewhere in a range which I'm comfortable managing. So, which means that the dollar liquidity versus rupee liquidity is critical for me. So, I need to know this, and therefore, this is a very important signal to give back to the government and all the various ministries on should I have duties, tariffs, trade restrictions, trade relaxations, etc., so that I'm able to selectively incentivize exports versus imports. Yeah, that's the thing.
okay, got it. Though, isn't the currency rate managed through demand supply forces? Like, market, doesn't the market decide what is the exchange rate? How does RBI influence the exchange rate?
By so in the short term, RBI manages liquidity of the dollar versus rupee and manages it. In the long term, RBI gives a signal to the government to take policy initiatives that will manage the structural demand supply mismatch.
Okay.
So if we let just the market forces go, there is no telling whether the rupee will stop at 100 or 200, right? So we don't know that. I mean, if you let you and I freely buy whatever we want from anywhere in the world, or if people let us freely invest our money anywhere in the world, we might think that okay, everybody might want to just go and buy Nvidia stock and just keep sending millions of dollars from India to that. So every rupee that I use to buy a dollar is making the dollar more and more and more expensive. So definitely it is managed tightly. It is not left to demand supply forces. That is the answer for your question on free convertibility. So in a country like a UK or a France, etc., it will be much more freely convertible. Where as an individual in France, I may be completely okay to just send money and keep that money offshore in a foreign account. Whereas in India, we can't.
Right, right. There
There
is
is a
some limit on how much you can send abroad.
correct.
Okay, okay. And you spoke of a purpose code Who feeds in that data of purpose code? The exporter who is
The,
receiving money, or the buyer, or like where is that data coming from? The purpose code data.
the exporter who receives money has to fill it in,
Okay.
and
After he
the
receives the
bank
money,
has
or
to,
at what stage is that happening?
while he's receiving the money. So you're asking a very relevant question, which helps me to also explain what Skydo is doing, which is different from what a bank can do themselves. So these are all small but significant pain points that an exporter encounters in their journey. So let's say tomorrow you're doing, let's say, marketing services, marketing consulting services for some customers globally. um, you only know marketing, you don't know banking and financial services, right? So you do marketing, and you know how to get clients globally, and you've been reasonably successful, and you're growing that business. But when you receive payments, you would think, okay, I'll tell the guy how much my services cost, and then I'll give him my bank account and he'll pay me. You will think it's as simple as that, and you are not wrong in thinking that. Unfortunately, because of all of that we just spoke about, uh, the reality is not as easy as that. So when you send that invoice to your customer, first of all, when you just send an email, it's not okay. You have to send an invoice. Then when you send an invoice, the first question comes in whether do should I charge tax or not? Okay, like, is tax applicable on this? Like, because you will always say, marketing services, then GST 18%, right? So is GST applicable? If so, will an international customer pay GST, because he can't take credit for that GST? So what happens here? That's your first question. Then once you send the invoice, that guy looks at your invoice, and then he sees your bank account number. You've given your HDFC bank account number, IFSC code. He doesn't know what to do with it because he doesn't understand what IFSC means, right? Then he'll reply to you saying that, hey, I don't understand your banking terminology. Can you please give me your BIN number and your SWIFT code? You don't know what BIN number means. So you go and ask your HDFC bank, what's my BIN number? He says, we don't have a BIN number. Account number is everything, but this is our SWIFT code. So then you will send account number and SWIFT code. If that guy is routinely used to sending international payments, he can now work with this information. But if not, if he is also a person like you who knows his business well but doesn't know international finance well, he's going to now tell you, hey, if you give me a US account number, it will be much easier for me. Or if you give me your PayPal ID, it's easier for me. I don't know what to do with this HDFC stuff, because my banking system is not allowing me to add an international payee. So there is a lot of mutual unintelligibility here, right?
And
Let's say we
PayPal
have
is
figured all of
expensive,
this.
right? I think PayPal will
And
charge you
PayPal
like
is expensive. So you will think, okay,
5%.
maybe PayPal is easy, it avoids all of this complication. So you go up and sign up on PayPal. Your customer pays you $1,000, you receive $990 first of all. And secondly, that 990 also is converted into Indian rupees at a atrociously bad exchange rate. So eventually you feel like, hey, I should have got 84,000 rupees if no charges were there. I actually ended up getting 77,000 rupees. Like, if I'm going to lose 6 7%, then next time onwards, let me mark up this thing, right? You will mark up, then your next customer will not pay you that much. He'll say, hey, how are you charging so much, right? And so on. So this is the friction. Then let's say the customer agrees to pay you by bank. He's also figured out how to add you as a payee, and then he has added you. He has sent you a SWIFT. He said, "I sent the money." You'll say, "Hey, I have not received the money." You go to your bank. Then he'll say, "You go to your bank and check. Yeah, I've paid it. It's got debited from my account." So you will go to your bank and check. Hey, this customer is going to send me. Then they'll say, "Please ask them to send you the SWIFT confirmation." So first of all, both of you don't know what is Swift confirmation. Then once you figure it out, then he'll send you some document, which will be just unintelligible gibberish to you. It'll just have some number and something. You will not understand it. Then your bank will look at it and say, okay, this is sent confirmation, but unless the Swift hits our nostro, we can't, do anything about it. You
What is
now
Nostro?
don't know exactly. So you don't know what is nostro, right? That's basically that. I remember I said the Barclays would have an account with HDFC Bank. That account is called nostro. So nostro, vostro is basically your and ours in Latin. So your account with us and our account with you is banking terminology. That is what is nostro. So basically, any foreign remittance that comes into the bank first comes into a third party account within the bank called the nostro account. So once the money hits in, then the bank's back office will wake up and say, okay, we've now received some remittance in the name of Akshay. Now we'll ask Akshay what he wants to do with it. So they'll send you an email or a SMS, or they'll have some notification in your banking system saying that, hey, you've received foreign remittance. Please give us disposal details. So you don't know what is disposal detail. You'll say, "Hey, dispose it to my account. It's my money. I want it." Right? uh, so at this time, the bank will basically ask you invoice number, purpose code. They might even ask you to submit your invoice, because they now have to validate two things. They'll now have to know whether you are receiving it for a legitimate purpose. Secondly, what is the purpose code against which you have received it, because they have to report it to RBI. And they also have to do the KYC check, AML check, and all of that of the sender, because tomorrow, if it is known that this is proceeds of crime, or this is drug trafficking, or this is money laundering, etc., they are liable by not only to answer RBI, but also to answer Financial Intelligence Unit, which is the global crime fighting unit, to answer this. And banks get fined billions of dollars if they get found out that illegal money has passed through them. So they are in a high risk profession, so they will actually ask you these questions. Now you will send them your invoice. That invoice will just say marketing services to Brian, and then he'll say, okay, who's Brian? What is marketing services? Can you really show us proof that this is really, like, there was something underlying exchanged? You have no proof. They'll say, okay, can you send us a purchase order? You will have no purchase order, because all of this was agreed over a Zoom call. Um, right? And then you will now say, hey, I only have an email chain, can you take that as proof? Then they'll say, okay, fine. Then you will actually have to compile all the email and send it. Then some credit officer there, who is not a very senior intelligent person, but who's like who's been given a job of following an SOP, that person will say, this does not match with our SOP requirements, so we'll need either one of A, B, or C documents, none of which you might have. So all of this nonsense happens, and finally you get your money. Because all of this has happened,
And
you now
what
don't
about the
even
purpose
know
code?
that.
How do you figure
Purpose
that?
code again, so you'll have to, then you'll ask your CA, or you'll ask somebody, or you'll go to Reddit and you'll type saying that, hey, I'm a marketing freelancer. What purpose code is used? Then
Okay.
you'll get three different answers. Somebody will say, "Bhai, ye use kar lo." Then somebody will say this. Somebody will say that.
Okay. Okay.
uh, this is truly the reality of the game, right?
Hmm.
By the way, once you figure it out, after a few years, you are a pro, right? You know something works, and you don't need these things. But in the initial period, this is all really nightmarish.
Hmm.
Um, so this is what we have actually solved now. So if now, instead of bank or PayPal, if you had signed up with Skydo, what Skydo would have done is, according to Indian RBI regulations, we would have signed you up, done your KYC, KYB, linked your bank account, done a penny drop and tested that that bank account actually belongs to you. And now you are all set here to receive money. Then, based on this KYC, we have now tied up with banking companies all over the world to give you local virtual accounts in different countries. So you would get a UK virtual account, or you will get a, that account is not a full-fledged bank account. You can't write checks from that account. You can't make payments from that account, but you can receive. It's a PO box, or a post office box, into which you can receive money meant for you. For your customer in that country, for your customer, let's say in Germany, he now has no complication of an international number with a different numbering system than he is used to. Instead, he gets a German account number with a banking terminology that he is used to. He can just go on to his local bank account, add you as a payee, and make a local payment. It's instant, because NEFT, RTGS, extra is instant. So in a few minutes, the money transfer is made. Skydo has now API integrated with all of these accounts. So as soon as the money hits the virtual account, we will get a ping, and we will tell you, "Hey Akshay, your money has been received in your German virtual account." Okay, and if you have already not uploaded your invoice into the Skydo portal, we will ask you at this time, can you upload an invoice? So you will upload an invoice. If you have uploaded the invoice, then that's it, you're done. Because from that invoice, we already know your purpose code. We know the invoice number, we know the sender, receiver, everything. We would have done all the money laundering checks, we would have done all the KYC checks, terror financing checks, everything. And we bring that money into India. We tell our banking partner through an API that, this money is meant for this receiver. and these are the fields that you require. You will require to know sender, receiver, currency, these money laundering checks, blah blah blah, all done. You will require a purpose code. Here is the purpose code. So the bank now need nothing from you, so they will not disturb you. But this is not even your bank. This is our bank. This is our partner bank. They have received the dollar, and by the way, the conversion from dollar to INR also we have pre-agreed to some rate, so it will get converted to INR, and the NEFT will hit your bank account. All of this in a touch-free experience to you. And I also, by the way, remove one other main anxiety that you have, which is my bank fleecing me? What rate have they applied? Because I'm back calculating. So this guy sent me $1,000. I got 81,000 rupees, but today the dollar to INR seems like 83. So I should have got 83,000. Where did 2,000 rupees go? Your bank will say, sir, we only have charged you 1,200 rupees. Remaining 800 rupees, you have to ask the sender bank, right? If you ask your customer, that guy will say, I don't know, man. I paid $1,000. I don't know if the bank charged something. I don't know, right? So now we remove all of that crap, and we tell you that hey, your customer paid you $1,000. 1,000 multiplied by today's live Google rate is 83. You got $83,000 in your bank account. Skydo has taken a $29 fee, $19 fee from this. $19 multiplied by that same exchange rate is so much. This is what you will get. So you know exactly that there is only one deduction from my account, and everything underlying it, Skydo takes care. So the international money movement fee, the correspondent banking fee, the SWIFT fee, the currency conversion fee, all of this I absorb, and I give you only one single rate. So and then this transaction doesn't end here, because remember I had mentioned GST initially. So for export transactions, you don't have to charge GST. You will charge zero GST, and you will say that this is an export transaction, so no GST applicable.
Though there are some nuances to that, right? I used to run an HR business, and I remember my CA telling me that if your place of service is India, which means that you recruited an Indian candidate for your foreign client, then you have to charge GST, something like that.
Correct. So if the service is delivered in India, then GST is applicable. If the service is delivered internationally, then it is not applicable. So if you hire a candidate and that candidate works in India for the international customer, then GST is applicable uh, on not on your service fee, but on the contractor's
Salary.
services.
Okay. Okay.
Yeah.
Okay.
So there are some nuances, but let's say in simple terms, this is zero rated, so there's no GST problem. But to the GST department every quarter or every year, your CA will make a filing that this is my business, all of this is export, and therefore zero GST. So he'll file a nil return. But for that nil return, one of the important backup papers is a foreign inward remittance advice that you need to have. This foreign inward remittance advice is a document that your bank will give you saying that this was an export transaction and we received the dollar payment. So with banks, you have to chase them for it, or a different bank give you in different formats. Some of the global payment platforms which originated outside the country and don't know all of these nuances don't provide for it, and so on. Uh, so in our platform, we have solved for this also in a seamless manner. So as soon as you get this payment, the FIRA is also downloadable and it's readily available. Then you can download this for a date range. You can download this once a year, once a quarter. You can email it to your CA. All of these things have been done. So in essence, what we have built is an invoice to cash solution where you can come to platform, raise an invoice, send that invoice to your customer, send payment reminders. Once the payment comes in, you can track the payment at each stage, and then you can reconcile those payments to your invoices by downloading spreadsheet version of invoices and payments. You can send that those details along with the FIRA details to your CA, and so on. So we have also, by the way, built accounting integrations. So we have tied up this to Zoho platform, and we are in the process of doing the same with Tally. So which means that you don't even have to go back and do the repeat work of reconciling it there. Once you do it here, it's reflected there. Or once you create an invoice there, you can bring it here seamlessly, and so on.
Okay, fascinating. You need your own. You need access to a Nostro account then, like because you said you are. So
through
you have.
a banking partner. So we can't move money ourselves, and we can't convert currency. So we need a banking partner. So the reason it took us 7 8 months after we started the company to launch the product was that we had to find a bank who would partner with us. both on the sending side and the receiving side, because we need a bank to provide us those local virtual accounts, and we need a bank here in India to receive this bulk fund, aggregated funds, and then convert it into Indian rupees, and then send all the NEFTs to different customers.
Mhm. Which bank did you tie up with in India?
DBS Bank.
Okay, okay. So essentially, their Nostro account, you are like they're lending it to
Correct.
you in a loosely
Yeah, yeah.
speaking manner. Okay, got it. And the uh, virtual account numbers that you generate, are these like charged to the exporter, or it's all covered in that $19 fees?
It's all covered. So as a small startup, you have to think, what's the least friction way for somebody to start using me. So if you start having annual charges, upfront charges, maintenance charges, etc., then there is more and more thinking points, and more drop off points. So we say anything up to sign up and creating a virtual account is free of charge, and I'm also not going to charge you a maintenance fee or anything, because the moment you start giving people reason to think why not to use that person, product, then they are not going to use you, right? Because already you are fighting many things. You're fighting perception that this is a fintech, is it more risky than bank, it's a new company, whether next year it will survive or not, who knows. These guys haven't yet appeared on Shark Tank, so maybe they're not even good. All of these things are already there in people's minds, so you don't want to add more reasons to
Mm,
confuse them, or dissuade them from trying you out. So
mm,
we only charge, everything that we charge is only that transaction fee. So we say only when you get money we get paid. Otherwise, there is no other charge.
mm. And there would have been pros and cons of doing a fixed dollar amount of $19 versus a percentage, because then somebody might say, okay, I am just charging my customer $500, so paying $19 seems like a lot, whereas somebody who's charging $5,000 for him, $19 will seem very reasonable. What is the way
Correct.
you think about that?
So I think there we kind of went with what is our ICP. Remember I said we started with manufacturing exporters, but as we did all the study after fundraise, and we went to all the export hubs in India, from Tirupur to Panipat and Ludhiana and Surat and so on, and we realized that manufacturing exporters would be difficult to convert on day one. One, because as a third-party payment aggregator, RBI has a certain ticket size restriction for me today. This was back in 2022. Now that restriction is gone away, because RBI has, further evolved that regulation, and they have made us part of the payment aggregator framework. We'll talk about that separately, but basically, when we started, we were part of a more restrictive regulatory framework under which we could operate, where the maximum ticket size per invoice that we could process was $10,000. So that directly gave us a signal that we should go for the really small guys to start with. But we also said, let's not go to the very, very small guys who are comfortable, receiving payments through credit card. Right, because that again is a very different use case, and there probably the need of the hour is instant payment and instant receipt and so on, whereas bank payment is going to take a day, whatever you do. So then we said, let's look at that sweet spot of anywhere between $1,000 to $10,000, which means that it is actually invoice payments. It's not a checkout online, or it's not a large manufacturing exporter. It's a small services company, or a small, or maybe even a small manufacturing company who's charging on an invoice a few $1,000s per invoice. So that kind of is where we felt the right sweet spot was. And it's not like we were so smart that we identified this niche. It was also trial and error. We wrote on LinkedIn, we wrote on Twitter, we spoke to friends who were exporting, friends of friends who were running small IT dev shops, etc., and we realized that this is a large enough market to go after on day one. um, this is another thing that I think a lot of people uh, get confused by when they start, right? So one is obviously the TAM has to be large. There is no doubt about it. But just because the TAM is large doesn't mean that you can solve everybody's problems on day one, right? You are a very small company with a very small solution. So you should look for a very specific sliver where you can actually truly win. Instead of trying to be also ran in 10 different segments, you be a master in one. So that's what we did. We just said we cannot solve for the credit card use case. That is not our ideal customer. We'll actually say sorry, we can't help you. Or we cannot solve the large manufacturing problem like Srivatsan's family business. We'll instead stick to this $2,000 to $10,000 thing, and we'll make them really happy.
Hmm. Okay.
So that made life easy for us. So in that ticket size, then removing the percentage fee was an easy decision, because there we said, let's make life very easy for them and say we'll just give one number. So it's easy for us to sell, it's easy for them to consume that information, and it's easy for us to prove that what we're saying is correct.
So your the $19 pricing works for your ICP, your target audience. I'm wondering though that you took a choice to charge fixed instead of variable to simplify it for them. But are your costs fixed or variable? So I'm sure you would need to pay the bank who's giving you the Nostro account, and there would be other sort of conversion charges. So are they fixed or are they variable? How does like what kind of gross margin do you earn on this $19 fees?
Yes, there some part of it is fixed and some part of it is variable.
Okay.
In fact, most of our cost heads are fixed, because they all are about per transaction collection charges or per transaction payment processing charges and so on,
These are
irrespective of
from
the ticket size.
the partner banks. They are charging you a fixed
Yeah, yeah.
amount.
From the
Okay.
sending bank or the receiving bank.
Okay.
However, the FX conversion is actually a variable cost, right? So it is actually dependent on the ticket size of the transaction. And there we pay, a pre-agreed rate, but it is still a non-zero number. So we will have to incur some of it. So therefore, um, my cost is variable, whereas my revenue is fixed, which obviously gives rise to some challenges. But that's okay, because I mean, I don't think of any business model where people will create the unit economics perfectly on spreadsheet and then be able to implement it in reality, right? It's always like you figure out what works for the market, what works for the customer, and then you figure out a way to make money from there.
Okay. And uh, though your cost you said is largely fixed except for the forex conversion charge, is rest of it is all fixed. Okay. Got it. And that forex conversion charge would, I assume, be like a single digit percentage of this $19, uh, or is it like much higher than that?
See, overall, while I don't want to be very specific about the margins and other things, I think overall we make a very good gross margin. In fact, payment companies are supposed to make 70-80% gross margin, because their friction, I mean, the friction that they have to overcome to make that payment should be low. Only then they can build a large business, because by definition, payment businesses are small basis points business. So which means that you have to move a lot of money to make profits. But within that small basis points, if you end up paying a lot of it to other people in terms of the cost of moving that money, then you will not be left with making much money. So payment businesses are low take rate but high gross margin businesses, and that's how we are also. So our gross margin is actually significantly north of 60% now, and will actually become closer to 80% as we scale.
So, okay, that's fascinating that payment businesses typically have high margin, though in India, the UPI network doesn't yet allow that, right? Because the UPI payments are very low. There's no merchant discount rate there for a large percentage of the transactions. And like most of
Yeah,
these
I
UPI.
mean, like I said, payment businesses are a low take rate but high gross margin. So low take rate can be as low as zero or near zero, which is what the UPI is. I think it's a little unfortunate that it kind of became absolute zero, as opposed to some small margin which could have been fixed, which would have truly made it interesting. Which is also one of the reasons why we started with cross border than start with domestic, because we said somewhere let's start where we can make a little bit of money And obviously cash is the oxygen, right? You have a little bit of cash, then you are able to reinvest that into expanding your business, find more customer segments. And anyway, any business PNL is a combination of smaller PNLs where you make different amounts of margins. As we scale, there will obviously be parts of the business where we'll make a lot of margin, parts of the business where we'll make very less margin, maybe even some small parts of the business where we may not even make any margin or we may lose money. But overall, as a portfolio, you will start making money.
Hmm.
So you can think of this as starting with one segment which we know there is a margin that is there to be disrupted, and therefore a reason for us to exist. Make some money and then go on from there.
Okay, interesting. Um, you said your gross margin will go up from 60 to 80%. This is on the back of more negotiating power with your bank partners, or
Two, three levers I can think of. One is obviously as we scale, our negotiating power goes up, and we'll be able to get better and better FX pricing. Second is as we open up two-way payments. So today we only support money coming into India. It's only a matter of time before we also support money being sent out of India. The regulatory stance there is a little different. The work we need to do there is a little different, which is why we have not taken on all the challenges together. But as we start that, then you can when you have two-way flows, you can maintain a small internal treasury, and you can really net off. So to that extent, you can reduce the cost of your FX conversions. And finally, with scale, you will also be able to have other opportunities of making money, like have a, small carry that the bank can give you because they are holding your money overnight, so they may give you a little bit of that share of that carry and so on. So yeah, I mean there are a few ways to increase this.
uh, Uh, can you zoom in on the treasury point? You said you can save forex conversion cost, and that is because some Indian exporters are sending out rupees, which you have to convert to dollars. Some dollars are coming in, which you have to convert to rupees. So you can
Correct.
do the matchmaking there without needing to go to another, like a Barclays or someone, for the uh,
That's right.
conversion. Okay.
That's right. Yeah.
Okay. This, of course, the bank which is giving you the Nostro account, they will facilitate this and therefore
That's
save you
right.
the money.
Yeah.
Okay. 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 Understood. Interesting. But otherwise, the margins will be same whether it's money coming in or money going out. Like that $19 will be like the pricing will be similar. The gross margin will be similar for both.
Pricing can be different on the India out, because the India out has got far more pain points for the payers. So you can actually solve more pain and therefore make more money.
Ah.
So yeah, pricing
Okay.
can be higher on the payouts.
Interesting, interesting. Okay. And what are your other costs? So one is, of course, the cost of maintaining the plumbing, which moves the money. What are the other costs, like cost heads broadly?
Um, you mean variable costs?
No, all total. Like one cost
Yeah,
is the
yeah.
cost of the pipes and the plumbing, which you pay to your bank partners.
Yeah, then there is customer acquisition cost, which is probably the most important variable cost. So, cost of advertising to get leads, cost of sales team and marketing teams to convert those leads, cost of operations and customer support, functions to service those customers, and so on. So these are all variable costs. And then there are some fixed costs that we'll have to incur, like we'll have to have a large product
Product
engineering
and
compliance team,
right.
which makes the product, keeps continuously improving the product, and so on. And cost of support functions like finance and HR and so on, which is there in
Hmm.
every other business. Then tech costs, so cost of AWS, cost of other software tools that we use, and so on.
Okay. How many transactions do you do monthly right now?
We do about about 1,000 transactions a month today.
And at what level will you be profitable?
I think we should be profitable. I mean, I'm not talking about any intermediate funny levels of profitability, but real profitability where you are actually covering all your costs, including fixed costs. We should be profitable somewhere between 5x and 8x of today's scale.
Okay. And what's the roadmap? By when do you think you will reach there?
Um, Our goal is to grow 5x the next 12 months. So end of 2025, we should realistically be 5x of today. So
Wow.
definitely 2026 is the year where we see that we should be able to break even.
Okay. Okay. Amazing. So 5x of today means you would be at a uh, ARR. Like, what would be the ARR? What would that work out to? Like
We should be at about $6 million of ARR.
6 million. Okay. Amazing. Amazing. How do you like? You have fairly aggressive growth targets. What's the what are the levers that you have in your hands that make you so confident of setting such aggressive growth targets?
Yeah, so actually, I'll answer it in two ways. So this is not, just a random number. So there is some logic behind it, but that is still the second part of the answer. The first part of the answer is just the ambition, right? So we are so small, the market is so large, and the pain point that we are solving is real, which is proven by the customers who are transacting today and the money we are moving today, that it would be a shame not to be aspirational and ambitious and grow 4 5x year on year. That is how we frame the aspiration, first of all. Then we can always say, why not 5x, why not why only 5x, then why not 50x, right? There practical limitations on how much customer acquisition cost I can spend, because I spend the money to acquire the customer today, but I get returns from the customer over many months. So there will always be a cash flow mismatch between spending today and earning tomorrow. And that, for our current level of scale, we can only spend ahead that much, right? So without becoming profitable. So that is what dictates the 5x and not the 50x. And the second thing, obviously, which is practical human conditions of your team and yourself able to scale yourself up to managing that complexity, where there is a limit on that. So these factors broadly give me a range of anywhere between 3x to 8x is the kind of scale you can make. Last year, for example, year over year we have grown 6x.
Wow.
But that's a very very tiny base, so you can almost argue that that's not even predictive of whether we can do the same thing one more year. So this is the first part of the answer, which is huge market, lot of potential. So therefore, you better grow fast. Second part of the answer is, what makes you believe that you can actually do it. So if you 5x seems very big, but if you think about it and break it down month on month, it's actually about 16 17% month on month growth. That's it, right? So that's the power of compounding, right? You grow 17% every month, and then in 12 months, without even you realizing it, you're actually at 5x of previous year. um, can we grow 16 17% month on month? That's the question. And we are able to see over the last 6 7 months that we have been able to grow even in our current business, and there are new growth engines slowly coming in. For example, till yesterday we were only serving small dev shops and other tech exporters. Today we can actually serve Amazon e-commerce exporters, because we have been approved by Amazon as a payment service processor for Amazon sellers selling from India to global marketplaces. So that suddenly one more growth engine gets added. Then we also have now realized that not only can we support pay-ins into India, we can also support payouts from, let's say, a US or a UK to Indians. That means that instead of acquiring only the receiver, can you also acquire the sender, for whom it's a big pain point to make 10 15 payments every month. So you make their life easy by just saying that hey, you make me one payment and I'll make sure that all of these 15 people get paid. So we just started that. So this is not a new customer segment or a new use case, but a different go-to-market approach. And we just started doing that, and we are seeing slowly and steadily some progress there. So yeah, I mean, it's a combination of proven growth over the last few months plus new growth engines getting added, team getting more mature, and therefore being able to handle slightly more complex problems and so on.
Interesting. How much time does it take for the CAC to be recovered from a customer? Like the customer acquisition cost that you spend, in how many months does that get
Nine
recovered?
10 months today,
Okay.
and we know that it can probably be better as we get to larger customers. Similarly, it can be better if we squeeze out some more efficiencies in multiple parts, but it is still not bad. It's 9 10
Hmm.
months right now. Yeah.
Okay, okay. And these are customers who have like monthly transactions generally. It's not like a
Correct.
one-off transaction. So there's like a recurring revenue coming from.
That's right.
Okay, 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 okay. Why would Amazon need you? Wouldn't Amazon provide the payment pipes? Like,
It's not their business, right? So they actually have multiple payment service providers like us. See, they are in the business of
ah,
making 20% margins. Why
okay.
would they get into a business where they make 1% margins? Right. So,
Okay, okay, got it, got it, got it. Okay, okay, interesting, interesting. And I guess for acquiring senders, you already have an existing base of people who've been billed by the Indian exporters, the buyers. There would be an existing base to sell to start with.
yeah, that's the starting point, and then everywhere it's like that, right? You first prove your business model with some small sliver of people, and then the whole game becomes finding more such people in a cost efficient, time efficient way.
Mm. What's been your go-to-market strategy? Like these SMBs that you want to acquire, how have you been acquiring them?
It has evolved over time. We started with my co-founder and I just going on LinkedIn and shortlisting people who have tech businesses,
Mm.
giving them a friend request with a short message.
I
And
was
so,
looking you up on LinkedIn and I realized that one of those messages you had sent to me also.
see, so my
Yeah.
so my targeting works then. Yeah.
Okay.
Yeah. So that was our starting point. We started with that. Then gradually. We realize that we now understand what the customer looks like, so maybe this customer can be targeted through paid advertising as well. In fact, before paid advertising we also did bunch of events and seminars, both physical and webinars as well. So we went across the country. Those were highly inefficient, non-scalable, ways of a customer acquisition, especially given these are small customers. So it's not that each webinar would give me enough number of new customers to make that webinar or a seminar financially viable, but it actually allowed us to understand customers very deeply and in person, because you actually go to an event in Ahmedabad or Jaipur or Chandigarh, and you understand that these are the kinds of people who actually are setting up tech dev shops or digital marketing businesses, and this is the reason why they are currently underserved, and this is what appeals to them. This is what does not appeal to them, and then your more or less then your paid advertising pitch writes itself, because you have understood these customers up close. And so LinkedIn plus these seminars and webinars allowed us to understand how to talk to these customers and what to tell them when we talk to them. Then with this, armed with this, and we also had kind of promised ourselves that we wouldn't spend a dollar on paid advertising till we got to 500 customers. So we started paid advertising only after 500. And by that time, we had a reasonably good idea of what we should tell them. And then obviously that has been its own journey. Initially we started only with Meta, took us a few months to stabilize Meta. Then we started advertising on Google. And also this business is not a consumer business, so it's not like headphones or shampoo or sneakers, etc., that a lot of people are searching for it. It's a niche use case, so fewer people are searching for it. So then how do you figure out what to tell people when they actually searching for it, how to bring them into the sales funnel, etc. So the Google has been its own challenge. But quickly these two have now become kind of like about 60% of our acquisition comes from paid. About 30 to 35%, 30% actually comes from organic, that is people searching for us through our blogs, reading our social media feeds, either my co-founders or my LinkedIn posts or our Instagram. We have like a Instagram handle where we actually put funny reels on life of a freelancer and life of a small
Okay.
business and so on. And people actually do react to it. Some people do come and search for it. Similarly, we are participating in a lot of communities, so Reddit communities, Slack communities, etc. And we answer questions there. So we are patient. We are not going and selling there, but we are actually trying to be helpful there. We answer questions around compliance. We answer questions around payment risks, about banking terminologies and so on, and eventually some of that feeds back into organic leads. So all of this put together is about 30%. And the last 10% is referrals. So we have a paid referral program where each time you refer, you get one transaction fee waived off, and your recipient, if they sign up and do a first transaction, the first transaction is free. So that works nicely for some of the smaller customers. We haven't yet been able to translate this into how to motivate larger customers to refer, because free transactions is not necessarily motivating enough or exciting enough for them, but something else might be. So we are still in the process of finding that out. But overall, this 30 to 40% of organic plus referral, if we can somehow make it greater than 50%, and paid, we shrink from 60 to less than 50, I think that will be an ideal mix, and that's what we are trying to work on.
Okay. How much do you spend monthly? What's your like marketing spend? Your
We
CAC
spend
like?
about, yeah, we spend about 40, 50 lakhs.
Hmm.
Now, please don't ask me how many customers we acquire every month and then, back
Ah, that's
calculate the
fine.
CAC, because
That's
that's,
fine.
yeah.
No, that's fine.
Um,
That's fine. Okay. Okay. Got it. So interesting. Now, what is like, uh, you know, is there like a community play of your own here that you're planning? Because like these, your cohort is all people with a very similar
hmm,
need to grow. You're essentially like businesses who want to grow by exporting is like your cohort, right? Are you
that's right.
doing some of your own community initiatives and stuff like that?
That's a great question, actually, and it was one of the first things that stuck us as we started doing these, field seminars and so on. That people are very, united by a common mission. It has been challenging to build our community so far, because obviously we are not large enough to have that convening power, and it also requires, a lot of long-term focused investment into that. So it will not pay off immediately. Uh, we have made some attempts. So we created a growing global, newsletter. We created so we called it Growing Global. We also created a Slack group where we tried to add a lot of people and get them onto that. These haven't taken off yet. So us participating in other communities and being helpful and answering has been easier for us. That's what has scaled so far. Our own community efforts have so far been, not successful, mainly because we have also not been able to put in that much of bandwidth on making it successful. But we are very keen to do it. In fact, we are very keen. We have very, clear and tall ambitions there. So we also want to create like a data repository of small businesses, because such things doesn't exist. We want to track this industry. We want to reward great exporters and great freelancers and people like that, because they are truly unsung heroes. They actually bring in profits into the country every day. It is basically a small individual multiplied by so many people, which is a sizable industry by itself. um, Tech startups which are venture funded, but actually make losses, they're all written about all over the media. They get a lot of coverage simply because it just seems like millions and all these big words are newsworthy, whereas small businesses who are actually bringing in profits into the country, they don't have anybody to sing their praise. So we also want to create like an awards showcase and all of those things. So we have that aspiration. I think we just need to probably grow a little bit more to be able to significantly and systematically invest into this.
Okay, got it, got it. Interesting. I want to understand a little bit about who you are competing against. And I mean, one would be like, say, a Thomas Cook. Would a Thomas Cook be a competitor? Like the money
So not,
exchange?
not not especially Thomas Cook or Western Union, etc. Because one, Thomas Cook helps in foreign exchange, but for a specific use case of travel, and that too primarily for consumer use cases. Similarly,
Okay,
Western Union is a consumer remittance platform. But the way we look at competition is there are three kinds of competition. The first and foremost, which is like 80+% of market share, is actually banks. So that's the primary competition. The second set of competitors are well established global payment platforms, starting from PayPal, Stripe on the small ticket size end, to companies like Wise and Payoneer and so on, who are also more B2B in nature. So this is the second category. And the third category is companies similar to Skydo, who have started recently in India and are trying to build. And here there are also mature platforms like Razorpay and Cashfree who are big otherwise but small in cross-border payments and trying to build a business, and also other really new startups similar to us who have come in.
So in bank transfer, essentially, then it's either a like a Wise slash PayPal or banks. So banks, I understood like how you are improving the user experience as compared to the banks. How are you competing with the Wise or PayPal?
Um, so there, the biggest lever. There are two. Actually, there are three reasons why we are different. But I think only one of them like really appeals to people before they sign up. The other two they get to see only after they start using the product. So what they understand when they sign up is that their post payment compliances. Remember we spoke about all the trade compliances and GST compliances that you have to do. So that we have built a seamless workflow. And since we are an Indian platform, working to solve the Indian receivers problem, we have built it in a way that truly is seamless for them from a tax compliances point of view. So that's what tilts the bargain in our favor when it comes to these platforms. Second is that we are genuinely cheaper than these guys. So their product experience is excellent, but they also end up charging a lot, and this sometimes is a little bit of a hard sell initially because they don't understand it upfront. Like because these platforms have also over time figured out very smart ways of putting their pricing in such a way that you don't understand how much they actually charge you. So for
Give
example,
me an example. Yeah.
yeah, for example, Razorpay now says, we, uh, for this month we are offering you at no fee, forex payments at no fee. But the fine print is that there is no fee, but there is a FX markup. I'm going to transfer it at some FX markup rate, which is like very different from the ongoing rate. So people say, hey, you're charging me a $29 fee, whereas Razorpay is no fee. So why should I move to you, right? um, and so on. So the second part is a little tricky there. So that is where we need a sales force. Otherwise, it can easily be a fully digital self-serve product also. The sales force then tells them, okay, tell me how much money you're going to actually bring in, and then we have a calculator. The calculator is actually available on our website also, so people can also do it self-serve. But mostly we just then quickly share the screen, show them on the calculator that okay, even after no fee, this is what you will get bottom line in your bank account from company X, and this is what you will get from Skydo, right? So that then people are skeptical because in general people have gotten used to financial services companies mis-selling to them, right? I think that's built and burnt into all of our psyche that if somebody says something which is too good to be true, then basically I'm being taken for a ride.
Mm.
So only when the first transaction happens and they really actually see that they got the Google rate and so on, then they realize it. And the third thing which also they realize after they start using the platform is the fact that I am not just built as a point of service, a point of sale payments platform, but I've actually been built as a accounts receivable management software. So for a really small company, life becomes very easy. You can raise the invoice with me. You can send payment reminders to your client, track those payment reminders, get paid, and get step by step tracking sent to your email and WhatsApp, and store all the foreign inward remittance advices in one place. Send it to your CA, send it to your accountant, download it as a spreadsheet for recon, connect your Zoho accounting software with it. Like there are multiple small things that make your life easier, which you will appreciate only when you start using the software. So yeah, so I would say in general, when anybody asks me, I always say people come for the lower fee, people come for the compliance. Then once they start using the platform, people stay for the convenience, and people stay for the transparency.
Mm. Okay. Okay. Interesting. Uh, would Bitcoin also be a competitor like crypto? Because
Crypto and Bitcoin will be rails for us. So they could be yet another way of moving money. In fact, let's say we tomorrow expanded to instead of US to India, we support US to, I don't know, Venezuela, or US to some African country which supports crypto. We could straight away start using crypto or stable coins overnight to move money, and it can make our payments instant. It can make our payments even lower on fees, and so on.
Ah, okay, okay. But in India, because of the tax regime, crypto will not work.
Correct. And regulatorily also, I think RBI is still not, open to stable coins or anything else as a way to move money. And in general, I think our regulator is, safety first, compliance first. So they would take their own time to evaluate this and figure out a right way to do it. But whenever it comes, it just becomes yet another way for us to move money.
What is your take on crypto? Are you like pro crypto, or you're neutral about it, or?
I am pro crypto in the sense that I'm pro the technology that enables crypto, because it creates distributed ownership of assets which can be easily verified at a very low cost. And like I was giving you the trade finance example earlier in our conversation, today, there is so much of money lost and efficiency lost in people making very simple verifications, right? So just to verify your shipping bill, verify your payment, and verify your documents, there are huge trade finance shops and factories set up by big banks to essentially verify third party information, where it's not like they are doing any great intelligence in verifying it. They're just you know manually or operationally rechecking it, running them past certain sanctions checks and so on. So if all of that actually kind of was being done in such a way that the veracity of these documents and all of this is done in a distributed manner, then you could save massive amount of money and remove massive amount of inefficiency. So I truly believe in the technology or the blockchain technology that underlies crypto. Its manifestations are still very very early. I would say that we are just beginning to see the early manifestations of this technology, and over time it should be fantastic. I also see why governments are a little skeptical and are also throttling this technology, because it kind of flies against the face of the whole concept of a centralized government and authority and control. So I think I would say it's much larger than a small financial services use case. Right? It's a fundamental philosophical question for humankind. But I believe in the underlying technology, and I'm interested to see what all manifestations it will take over time.
Like how in India we now have e-challan, e-invoicing, which has automated
Exactly.
all of that. Okay, got it, got it. So something like that for a global scale would only happen on a distributed ledger.
Exactly.
Like it would be hard to have a central agency managing it. Okay, okay, interesting. You said financial services is a supply-starved market in India. What do you mean by that?
I mean, if you look at any financial product, whether loans or even investment advice or insurance, everywhere I think the market is underpenetrated. Everybody wants it, but they're not able to get it at the right price. If we are if you are a 750 plus credit score person, obviously every bank in the country wants to lend to you. But if you are between 650 and 750, the number of people who want to lend to you just dramatically drops. If you are below 650, absolutely nobody wants to touch you. But literally, like 5% of the country's population is actually that in that way credit worthy, right? So the remaining 95% people don't have access to financial products at all. In fact, if we just if we move outside our bubbles, we are all in a fancy apartment complex bubble or a startup bubble or a well-paying corporate bubble and so on. But if we just move outside of our bubble and meet people, they could be even friends and relatives who are working in small private companies, or who are working, who are self-employed and own a bakery or own a restaurant, um, uh, or are in the logistics business, whatever it is. Even doctors, lawyers, ex service personnel, ex policemen or existing policemen, you will see that it's just impossible for them to get credit. It's very difficult for them to get credit or any financial product for that matter. So India is massively supply starved. Everybody and just imagine there are so many multi-billion-dollar financial companies who are just built on serving the top of the pyramid, and there is still so much potential left to serve the rest.
Okay, interesting, interesting. Uh, you had spoken about what matches between you and Movin in terms of culture. Like you are both very
Yeah.
focused on creating a good culture, and you spoke of how Ola's culture was very abrasive. Tell me about what kind of culture you have built here and how you built it at Skydo.
Yeah. It's a work in progress, obviously, but our intention is to build a culture where it's a very high ownership and high accountability culture. Right from the beginning, we believe that um, it's very difficult for two people, however smart, however driven, and however hardworking they are, to build a company. It takes a lot of people to build a company. So the game is actually in finding set of like-minded people, giving them extreme ownership, and also showing them the path that hey, this extreme ownership carries risks and challenges, no doubt, but is a path of extraordinary reward, primarily for your self development and growth as a person, as a professional, secondarily for your career in terms of your experiences, and finally as a very very healthy byproduct, you should definitely be able to make a lot of money, right? So if this resonates, and if you feel like I want to take on that path of high ownership, high outcome, that's the kind of people we want. And by the way, whatever I just now said, I would say no founder would actually disagree with it. Everybody would want something like that only. But then walking the talk is very hard, right? So being able to implement that is not easy. So how do you consistently hire great people, pay them really well, like pay them way beyond your means? So for example, our leadership team right now, we pay them way beyond our means. Like if I compare our company's leadership cost bill versus other companies at similar scale, I would think that we are at least at 3x 4x in terms of leadership cost. But that was a conscious decision. We said that great people only can build great companies. Two founders with a bunch of smart but completely inexperienced youngsters, or just average performers, will not be able to achieve anything. It'll only create more and more stress. Instead, let's actually build a great team. If we win, we all win together. Then so which means that first of all, finding great people who in their areas have to be better than we are, then paying them really well, sometimes way beyond your means, with the aspiration that with scale this will get normalized, and then in good and bad times, holding it to it, because that's very challenging. And then third is giving them good ESOPs, and then constantly topping up those ESOPs so that they feel continually invested in the mission. This itself is tough. Then the other thing that we are also trying to do is implement our own version of being radically transparent, and polite yet honest in how we give and receive feedback. So we don't try to varnish the truth or say half truths or outsource the bad message to a HR person or something like that. We try to tell people when it's not working. We are also open to receiving that feedback, and we first of all we practice it between each other. So Movin and I meet every Saturday. Whether we have work or not, we still continue, the two of us continue to work on Saturdays, and among all the other things, there is 30 to 45 minutes that we set aside for just giving each other feedback on various things. There are certain parts of the company that I run, there are certain parts of the company that he runs, but we make sure that we let the other person know what we actually think of those areas, and if we have any concerns there, like for example, if I feel like he's probably hiring one or two people too many in some particular area, I actually bluntly ask him, why do you think you're building so many people in this team? Do we really need? And then he doesn't think of it as an affront. He actually is happy to then sit me down and explain to me why he's hiring. Similarly, if he thinks that growth is slower than what we think, or probably I'm being softer on the team which underachieved targets, he doesn't mince his words. He just directly and bluntly tells me that, and then I also tell him my point of view on what I'm thinking and so on. So I think this we practice among ourselves. We practice it with the team. So all of this is still around the leadership team, which is very important. Then the other thing that we also do is we are extremely transparent with everybody. So everybody in the team knows the full P&L. They know exactly how much money is left in the bank. And last year when I was fundraising, I was continuously updating the team on what's happening, what's not happening, and so on. And I don't think there is any secrets within the team. So we just tell everybody everything. This is also very difficult, and it has been continuously challenging as we have expanded the team, because it is very easy to do this when you are 10, 12 people, and most of them are of a certain maturity and intellectual caliber that they can handle information well. But as you expand the team and you bring in new youngsters, new frontline team members who may not be that experienced to handle information, it's challenging. But we've continued to do that, and we've continued to believe that people will be able to rise up to the occasion and handle that information. Um, so whatever we do, our all hands is like fixed, and we never not do it. And our all hands are like every once a month, it talks about company strategy, it talks about what we have achieved in the previous month, where we did not meet our goals, where we did, what we struggled with, and so on. So I think we are just being open, vulnerable, and candid with ourselves, with the team, and uh, we pay them well. We think that we should be industry top quartile paymasters right from the beginning. That's something that we have set ourselves to do. And wherever we think that we are underpaying, even if the person doesn't recognize it, the moment we know it, we actually like fix it. So, and we have done it a few times, and then that creates a tremendous trust reinforcement loop, which then people know that okay, these guys will not screw me over on purpose. If at all they are doing something which is suboptimal, it is probably because it's a blind spot, so let me go and highlight it to them. So yeah, this is the kind of culture we are trying to build. I don't think we'll be perfect, right? So there may be some areas here and there we might miss out on, but this is at least the intent, and the actions behind the intent.
Amazing. How do you? What's your hiring process like? How do you identify he's the right fit for us?
It's hard. So we are slow in hiring. So I would say at all points of time we are perennially short staffed, and I'm happy to be in this position than actually be overstaffed. Um, so first of all, for each role, the process starts with first of all justifying whether that role is required. So at a philosophical level, one thing we have decided is that till we reach a reasonable scale, we should not hire even a single person who does not directly contribute to the revenue. Right, and which means on day one we did not hire any founder's office or generalist or some kind of like these vaguely defined roles where they would just be leverage for me or Moen. Instead, we said on day one the only thing required is an engineering team, one product manager, and then one person for compliance and one person for finance. If we were running a e-commerce business or a software business, etc., even the finance role we might have delayed. But because this is a payments company and there are lots of regulatory stuff involved, etc., we thought finance was critical from day one. Um, and we did not hire anybody for sales, etc. We hired the first salespeople only after we ourselves could sell to 100 customers, and so on. So that has been one constant philosophy. So which means that we did not hire any buddy where we were not 100% convinced. Many times I have seen even in my past roles, uh, poor interview process is usually because of poor clarity on whether that role is even required.
Right.
But the moment you are 100% clear that I need this role, then it actually fixes a lot of things. It fixes then what level you have to hire, what persona you are looking for, what is the exact thing that person will do. So you can write a very, very good job description. So the second thing then we do is we write the job description as detailed or as clear as possible. And along with that, the interview process. And no interview at any level for us is less than 3 rounds. So we typically do between 3 to 5 rounds, sometimes even 6 rounds. Um, and for the more frontline roles, there is always a written component where we actually ask people to work hard on the internet, finding some information, compiling that information, etc., which teaches a lot about their ability to actually sweat it out, ability to actually compile stuff, and so on. So this is so first is philosophy, second is clarity in job description, third is clarity in the interview process, and fourth is then having every interviewer feel like they can veto the whole process, right? So basically we say We say yes only when all of us are convinced. Even if one of us is not convinced, it's a no. So we are saying that we are very very happy to make the error of omission, but not the error of commission in hiring.
Hmm. Okay, that's a good philosophy to have. Let me end with this. Like, you know, you've done multiple types of entrepreneurial experiences, from a family business to a highly funded startup environment to now your own. What are what are some learnings that you would like to give to young aspiring founders?
Yeah, so in general, I think advice is the toughest part because it's highly subjective and contextual. Um, I think honestly, instead of advice, I would actually reframe it as what are some of the uh, you know uh, things not to do, right? So I think going in with a very fixed mindset on anything is actually not a great idea, because and I have made this mistake multiple times. I've actually like just boxed myself into very very narrow positions very early on in my career instead of just letting things happen to me and just taking things a little too little more open ended. So I think that I would say it's better just to, because see, life can surprise you a lot, and mostly in the positive direction, because great what are the great things possible with yourself, your own time, with business, with the job experiences and so on, is very difficult for you to predict because you don't even know it. So if I have never seen a skyscraper and then somebody asks me to actually draw the tallest building I can think of, then there is no way that I would ever actually think of it, right? So I should not fixate on something just because this is the boundary of what I know today. So that's one thing, and it manifests itself in multiple ways. It could be about taking a particular job. It could be about exploring a different role or a new area of work. It could be about friendships. It could be about traveling to a different country and working everything. So I think having that ability to just let life teach you rather than just going in too fixated, I think is the first thing I would say. Second thing I would say is a co-founder is very important to start a company. Um, there may be certain amazing people out there who are able to do it all themselves, but for most of us, entrepreneurship is too painful, too hard, too lonely, and too scary to do alone. To do it alone, and I think having even one other person is just makes the job infinitely easier, because then you're no longer actually conjoining yourself and your business. You're happily able to see these two as two separate things. Srivatsan as an individual today comes to Skydo to work and then goes back home, has his life, his family. Srivatsan and Movin together have built this entity called Skydo, which they're trying to make it successful. So that separation in my mind, in my psyche, is so healthy. It's so important. This is the number one thing that a co-founder brings to the table. Of course, apart from that, the ability to push each other, the ability to be, taking complementary roles. Somebody can play A plus game one day, and then you can be a little bit down. Then the other day things can reverse. All of that are still secondary benefits, but the primary benefit is to then not conflate individual success with company success or failure, and that's very very important. Uh,
Fascinating.
and then the third thing I would say is not be too money minded or money focused. I think that's somehow I feel like, and I think a lot of smart people have said it, including Psychology of Money book recently, that ultimately the feeling of being wealthy is actually very different from actually being financially wealthy. They both are completely delinked concepts. So therefore, if somehow you can make it not about money but actually about something else, then it's also much easier to make very bold decisions. And Courage is actually the only thing that truly separates people who are actually entrepreneurs versus who are not. And you don't have to be start a company to be an entrepreneur, right? You can be an entrepreneur in multiple things. You can just start a running group in your area and make it a 100-member running group, and you're still an entrepreneur, having done something phenomenal. So I think courage and action orientation are the only two things. And what really creates that courage and orientation to action is actually not worrying about consequences too much. And one of the most important consequences that cripple us is actually worrying about financial consequences. So if we can just not to worry too much about it, I mean, of course, we all need money, we all need to have a good life. But if you can just put it in perspective and say, what's the worst that can happen? Even in that worst case, I'm not going to really be penniless. It's okay. These things are really not important. I'm doing it for this purpose or for this goal, and that goal is not necessarily money linked. Then I think you can be a 10x version of yourself and a much bolder version of yourself.
Um, you raised 5 million in your last round and 5 million in the first round. I'm sure in your last round you could have raised a lot more money. Right, like
Yeah,
because as you said, this sector is a sector in which VCs have a thesis that there is an opportunity to build here. There are global examples like Wise, like
yeah,
multi-billion-dollar valuation companies in this remittance space. And as you said, this is like high margin once you reach scale.
yeah.
um, so, what was the reason to not raise more? Why did you only raise 5 million? I mean, you could have raised more. You could have targeted a 10 million ARR in a year's time and all of that.
Two things. One is, while in general there is a massive interest, and VCs are definitely long on this space. I think there is also a temporary challenge in terms of valuations, right? Um, so I think we raised too much money in the first round. In hindsight, there is no such thing as too much money. But what I mean is, we raised money at a too high a valuation in the seed round. Not because we wanted it, but those were the that was the going
There's the
rate at
environment.
that. Yeah,
Yeah.
that was the going rate at that time, and so it just happened. Now valuations have tempered a lot. The US Treasury being at 5% for like extended periods of time just completely changes economics for everything in the world. All other assets are priced against the US dollar, right? So then we had two choices. We had a choice of probably taking very little money, but at a just a reasonable valuation, so that then over time we become like a much more interesting company for the next round. Or we had the choice of diluting a lot more, taking a lot more cash, etc. I just felt like having a little less money would also keep us more hungry, more focused, and bring the valuations down a little bit, so that then we are also putting ourselves in a good position for a fantastic fundraise next time or the next two rounds, etc. So I felt like the longer game was better than the shorter game. So that's
Mhm.
the reason.
Okay. Okay. So this last 5 million was at like a flattish valuation, similar to
No,
the.
we still got a 1.5x from the previous round, so it's not like it
Oh,
was flat.
mm, mm.
But I think ideally we would have wanted to do it at a 3x or something like that. But
Yeah.
we felt like it is not. It's this is more prudent and more long term beneficial.
Makes sense. Makes sense. Amazing. Thank you so much for your time, Srivatsan. It was a real pleasure talking to you.
Thank you.